Traders at Citibank say light trading at the fixed income market as investors await the outcome of the central bank's monetary policy committee meeting later this week and the bond auction for September scheduled for next week. Tunde Adama, the head of trading at CNBC Nigeria, joins me now to discuss these developments. Tunde, thank you so much for your time. So let's start first of all by just getting the mood of the market ahead of the MPC meeting this week. We know that has been rescheduled, and from what we gather, it's because of the roadshow relating to the Eurobond issue. Your perspective on how investors are trading ahead of that MPC meeting?
I think people have been a bit cautious. Volumes aren't really large going through the market now. There seems to be a sense of, so we saw some slight profit taken towards the end of last week into today, but not in large volumes. Most people are just trading sort of sideways, being picky about what they do. I think most people would want to go into.
Would you say the caution, so sorry to interject there, but would you say the caution is because they are unclear as to how the MPC would decide at this meeting? Is there anything out there that suggests that we could be in for a surprise?
No, I don't think most people do, but I think there's just a general cautiousness that goes into most of these meetings. I mean, we've been having a flurry of really good data from GDP to inflation. SDR is in, we're going to Eurobond. So it's been a lot of good news. So I don't expect much surprises from the MPC, but traders would always still try to be a bit cautious, just go into it. So it's not like people are doing one thing heavily, like selling heavily or buying heavily, but it's a case of, just maintain your position. If you need to increase or reduce risk in your book slightly, do it now, but wait for the MPC to come out just in case there is a bit of guidance that's given at the MPC that should guide what you do after that.
Well, you never know. As a surprise is not a surprise if you're expecting it, right? So I hear you. Okay, so let's talk about the bond auction, though, because there is one next week. And from the activities we've seen with the DMO at the last auction, what are you anticipating they would do this time? I'm hearing that we may have 2 bonds on offer.
I mean, there are 3 bonds that they put on offer. At least the guidance is for 3 bonds, the same ones that were issued last month, 2027, 2036, and 2050. So they would give us the final, they usually give a range, what they're going to do, and a week before they'll give you the exact amount. But based on what they've done on recent, there's probably going to be 50 billion on offer for each. The demand has been strong there, and this month we have about 300 billion in coupon payments coming in. So I expect that there should be quite a decent amount of demand at that auction as well. Again, with the flurry of good news and all that as well, I think market should be a bit bullish, right. Those bonds. But of course, especially no surprises at the MPC, like you mentioned, I expect that the auction should be a successful one, right, for the DMO.
If we are taking a look at the results that banks have reported over the last few weeks, there is a common trend there. We are seeing the impact of the interest rate environment on interest revenues. And I wanted to hear more about how you see that playing out over the rest of the year. For example, do you think that we could see interest rates shrink? Or do you think that we'll probably see the monetary authorities try to stay the course and keep us at the current levels?
Well, I think part of the challenge on the revenues was in Q1. I mean, we came into this year with very low interest rates. CBN had kept interest rates very low last year because of the COVID and trying to ensure that credits circulated through the system so that growth and economic activities will happen. But over the course of Q2, they've gradually normalized interest rates. So I expect that the second half of the year should have better reports from an interest rate perspective. Between now and year end, they've issued quite a lot of bonds and fixed income instruments so far this year. Usually, again, still difficult to say, but usually last quarter they usually sell a bit less because they've sort of concluded what they need to buy, in the early part. I mean, need to issue in the early part of the year where there's a lot of interest. So that could happen. But I don't expect that we see interest rates, for example, fall to the kind of level we saw in 2022. So there's probably a bit of room to moderate it a bit from where we are now. But again, MPC, there's always the consideration about inflation is going in the right direction. They might want to still keep things the way they are. And of course, FX, keeping yield at an attractive rate for the investors who are coming in. So a bit difficult to say, but I don't expect yields to drop as significant as they did in 2020.
I'll certainly agree with you there. I don't think things are stable enough for you to move widely in either direction. But let's get this conversation now to the Forex markets. Now we're seeing some interesting dynamics in the parallel market where the Naira is now trading closer to 550 to the dollar. And we have seen that climb significantly since the last MPC meeting, interestingly, when the central bank announced some changes to how it will deal with bureau de change operators. That has obviously stifled supply to that segment of the market, if you like. What do you make of the central bank's policy right now, and how do you see this playing out? Because on one hand, we're hearing rhetoric from the CBN suggesting that the parallel market is for illicit transactions. If you need dollars, you've got to come to the official market. Even if you have to wait a bit, you will get it eventually. So, but on the flip side, from what we know about the history of this market, you never want that gap to be as wide as it is right now.
Well, I think the central bank probably isn't surprised at the initial reaction of rates in parallel market going up. I mean, they've taken a significant amount of the supply to that market off with the policies that they came up with at last MPC meeting. But the central bank has given assurances that they'll continue to supply and in fact increase supply through the bank for all people with genuine demand. We've received SDR about 3.3, which is coming. If our reserve numbers are going up, the Euro bonds that are going to happen soon. So the central bank obviously even has a bit more ammunition to help support the Naira. So I would expect that if we give it a bit of time, central bank will increase even the supply that they have in the market now, and that hopefully that should permeate the whole market, reduce the need for people who still have to go to the parallel market and possibly bring down that spread between the official rate and the parallel market.
Right. Let's interrogate that supply in the official market right now. We know that it was tough 6 months ago, 8 months ago. It was really challenging for the central bank. But as you mentioned, things have changed a little bit. We've seen supplies come, especially from the SDR, as you mentioned, and other sources. Are we seeing a significant shift in cases of people looking for getting their demands met in that market? Because there has been so much talk about this build-up of pent-up demand for foreign exchange.
Well, I mean, if you look at where we were for most of the middle of last year and towards the end of last year, and now central bank has increased the amount that they are selling at their intervention funds, all the windows, the SMEs, the I&E markets, and the invisible and SME funds, right? So those have increased significantly between now and last year. But like you mentioned, there's a bit of a backlog and it will take time to fully settle and for the market to settle. But they have been increasing, and from what we've been hearing in the media and the statement that we're bringing out, there's a chance that we'll probably see a bit more supply coming in from them as well. And I think if they continue to do that, not just maintain what they're doing now, but actually increase a bit of supply there as well, then we might see a bit of relief going into the future.
What about on the FPI side, foreign portfolio investors? Have we seen any movement at all in this direction? We know that in the past there has been, in the recent past, there's been more of a case of investors trying to take money out as opposed to bring it in. But given the dynamics that have played out recently, the good GDP numbers, what you spoke of earlier about the SDRs and so forth, are we seeing any significant shift in sentiment from the foreign portfolio investors?
Not yet. The central bank continues to sell to them. I think they've increased the volumes that they've been selling to them through the banks. There's a roadshow happening for the Eurobond. I would be surprised. In fact, I expect that there will be a lot of engagement between the central bank and investors, and the central bank will be doing their best to assure them that things are normalizing. They will probably point to the fact that they are selling a bit more to them for those who are still in country. That number should have shrunk significantly by now based on increased sale by the central bank. And that engagement hopefully leads to assurances and helps to bring the investors to a state where they start to look at Nigeria again. Because, things are beginning to change a bit more. And with where oil prices are today and the SDR and what's happening with the Euro bonds and all, and the level of backlog that the bank has spread significantly, I think there's a case to be made that Nigeria should be taken seriously and that they should bring back their funds to invest here.